Welcome back to the ETF Inspector. It's Tuesday, November 18th, a little after 4 o'clock in the afternoon. And in today's video, I want to talk to you about a highly contested subject of reverse splits. So we're talking about YieldMax. I do a whole lot of coverage on ULTY and some others, but they're not the only ones to talk about. So I'm going to tell you what this means for ULTY, but I'm also going to bring you some information for all the others as well. Reminder, I'm on X at ETF_Inspector1. I'd let you know when videos are coming out, new funds are coming out, when declarations are announced, and all that good stuff just like that. So the topic you probably heard, there was rumblings, there was talks leading for the last couple of weeks now about will they do a reverse split, should they, shouldn't they, and then recently we've heard people talking about it. I've seen Ambassador of Quan, amongst others, posted it once it hit. He is definitely quick to notice SEC filings all the time. So I did go through. It would have been great if I could have just pulled one spot to get it, but when you pull them up, there's a collection of a few here, a collection there. So I just want to show you that this is really happening. It is all official. And so we're going to talk about what exactly it means, how it's going to affect everything, some positives, some negatives, some things just to make sure you consider. Okay, so for starters, we will go ahead and look at Ambassador of Quan's list. I double checked it against a couple of other people's as well, and then also went ahead and looked them up. But just to gather them all in one spot, what we have is a total of 12 ETFs. Now, my very first reaction is, YieldMax has been talking about this. We've heard them not say that they were going to do it, but say that they have gone back to considering it the last couple of weeks on our Spaces talks on X. So my expectation would have been we should have seen something posted from them. If I just double checked before the video started, because they have been posting a lot lately, talk about what they're going to announce tomorrow, talking about being on Wolf Financial tomorrow, talking about launching of the new Target 25 funds, announcements today on declarations, explaining how covered call ETFs work, and then it goes back to again talking about their Target 25s that are coming out, what they hold in Chippy. Now we're getting into last week. So why in the world are we hearing this from other influencers and SEC filings as opposed to coming straight from YieldMax? So, okay, it's not on their X, but is it on their website? They've got news and articles, right? They also send out emails. I can tell you it didn't come in email. And then we've got announcements, news, distribution, right? Announcements right here today. We've got launching of the Target 25 funds today. We don't have anything about reverse splits. So it's probably not a good look. Like, if we're embracing this and this is the plan going forward and it's best, then I feel like we should be talking about it just like we talk about the launching of the new funds. So I'll say strike one, but not necessarily the end of the world. Just I didn't like it. But okay, so I put together just a little bit easier to look at list. So we've kind of got two lists, and within them, two groupings. The first one is ULTY, which is the Ultra Option Income Strategy Fund. Murney, the Moderna Option Income Strategy Fund. That's an individual income fund. You got YBIT, Tesla, right? YBIT's the Bitcoin Option Income Strategy Fund. Tesla's Option Income Strategy Fund, and XYZY is Block, or XYZ's Option Income Strategy Fund. So all of those, the market will do its thing on November 28th, and when the market closes November 28th, whatever the share price is, that will be what takes effect as far as the reverse split. And then when the market opens on December 1st, I know you see that down there, but ignore that for now, the share prices will begin trading at their new share price. Did I say share prices? The shares will begin trading at their new share price. So for example, we have two different kinds. ULTY and MYRNI are doing a 1-for-10 reverse split. So that means these are today's current prices at close. So if today was the close of market on November 28th, then ULTY closing at, this says 410, but I think it's it might be rounding, because otherwise that should have said $41. But in any case, let's say it was 410, 409 and a half. Either way, you're looking at $41 or $40.95 opening on the next trading day. MYRNI, same thing, multiply it by 10. So you would suddenly have 1/10 of the amount of shares that you had, and each share will be worth 10 times more. It's just a math problem. It doesn't actually change anything. If you had 10 shares worth $41 or $4.10 a piece, you would suddenly have one share, and that share would be worth $41. And then YBIT, Tesla, and XYZY are all going to go through a 1-for-5 reverse split. So again, these guys in the $6 to $7, $7.50 trading range would multiply by 5, and you would have your shares divided by 5. So all of a sudden, YBIT's going to be worth $37.68, Tesla's going to be worth $37.55, and XYZY worth $33.10. So you understand the way that works. And then not sure what the reasoning being for why to split them up, but then the second group, AIYY, Coney, Crash, Dips, Fiat, Abney, and OARC, are going to take effect on the close December 1st. So however they close trading their share price on December 1st, they will undergo their either 1-for-10 or 1-for-5 reverse split, and share prices will be multiplied by 10 or 5 respectively. When the market opens the next day on December 2nd, that's how they would begin trading. Okay, so in AIYY's example here, if this is how they closed, they'd be opening around 1935 or 1940. Again, it's only going to show full pennies. So if these things closed at a half a penny, fractional penny numbers, that's why your multiplier by 10 isn't looking exactly perfect, but that's how it's going to go. All right. So AIYY is the AI option income strategy fund. Coney is the coin option income strategy fund. Crash is the inverse or the short Tesla fund. Dips is the short Nvidia fund. Fiat is the short Coney Coinbase fund. ABNY is the Airbnb option income strategy fund, and OARC is the ARC Innovation Option Income Strategy Fund. I believe that's related to Cathie Wood, famous name in trading. Okay, so that's your big picture on them. So what's that look like for ULTY? So again, as you can see, I started the setup here, and then I decided to give us some more space. But ULTY closed yesterday with 366,500,000 outstanding shares and closed today with $4.10 share price. So if today were December 28th and things closed like this, then on December 1st, ULTY would open up at a $41 share price. There would now be 36,650,000 outstanding shares. So this is going to get divided by 10. That'll get multiplied by 10. At the end of the day, nothing changes as far as the value of the fund. If there's $1.5 billion in assets under management at the close on November 28th, then there's $1.5 billion in assets under management at the open December 1st. Nothing happened to the money. It's a way of breaking up the pieces of the pie. You've probably heard that phrase lots of times, or piece of pizza, whatever you want to call it. It's just trying to help you understand And I've got kids in 4th, 6th, and 8th grade, so I know all about trying to help kids understand fractions and division and things like that, ratios. Not saying that I'm talking to kids here, but so what that should also do is increase, obviously, your distribution amounts on your weekly announcements. Now, right, so 6 cents to $4.10 is going to be similar to what 62 cents would be to $41. Now, obviously, that doesn't mean we can expect 62 cents on the first one, because it's all going to depend, one, on how they trade, and two, on what their implied volatility averages out to be, especially as they have been listening to people and added some very big names, Salesforce, Costco, Google, things like that, Meta, to these. That is going to drop the implied volatility, which means it's going to drop the percentage annual yield payout that's coming. But obviously, you're going to be able to start expecting higher payouts, but it's all percentages wise, so it's not going to be any more. Getting 62 cents on a $41 stock is the same as getting 6.2 cents on a $4.10 stock. So, or in this case, fund. All right, so I'm hoping that helps people to understand how that's going to work. Again, so when we scroll down to this second column, I did kind of forget. So the first four, AIYY, Coney, Crash, Dips, and Fiat, the first five, are undergoing a 1-for-10 reverse split. The last two, ABNY and OARC, are a 1-for-5. As you can see, the way they've selected it, looks like things in the $5 and under range are getting that 1-for-10 split, and things above that, but still single digits, went for the 1-for-5. One notable exemption here, one that was left out, is Misty. I think a lot of people were surprised to see Misty not on this list, even if it was just going to be a 1-for-5. So maybe that means they are bullish over there on Misty and think it's going to make a big comeback quickly, but or maybe we'll get a third selection out here. All right, so I want to finish out by kind of helping people to understand what this means. Now, obviously, you can do the same thing here, so this isn't anything crazy, but I just want to point a couple things out to you. So looking up some reverse split information, AI kind of gives you some help. ETFs undergo a reverse split when the share price becomes too low, increasing the share price and decreasing the number of shares outstanding proportionally. That's what's important. So this is taken to maintain a certain price level. For example, 1-for-2 split would turn 100 at 10 into 50 at 20. It all still works out the same. So what happens? Your share count decreases. In ULTY's case, you're going to divide your shares by 10. What else happens? The price per share increases. You're going to multiply the share price by 10 in ULTY's case. In any case, your total market value remains the same. Okay, so if you've got $10,000 in ULTY at the close on November 28th, then you've got $10,000 at the open on December 1st. All things being considered, obviously, market moves that drop or go up during non-trading hours obviously will affect the open. Stocks don't always open at the exact price they closed at, but just trying to help you understand. Not sure the reasoning on these, but they all do get a new CUSIP number. So we did see that in the SEC filings. Everything's got new CUSIP numbers. So that's has no effect for you guys. Kind of makes my job with everything on my spreadsheets and my CUSIP numbers and my collection of CUSIP numbers so that I can quickly reference when they add or take away things from the fund. So it's going to make that more interesting, I'll say, more annoying. So what are some reasons for an ETF reverse split? Avoiding delisting. I can tell you that's not the case for these. Okay. You hear a lot of people saying that. That's not the case. Improving perception definitely could be the case here. A low share price can be perceived negatively by investors, and a higher price may improve marketability. We are not worried about minimum price requirements. As far as ULTY is concerned, they've said that many times. It's possible on, say, what was it, Murney and what's the other? Murney and AIYY, where they're now under $2. Maybe they're in danger, but ULTY is not. They're not being forced to do this. Reducing costs. They haven't talked to us about this when they talk about giving the positives, but in some cases, they could be performed to reduce the costs associated with servicing a large number of low-priced shares. They talk about sending out mail for proxies and voting and things like that. And then fulfilling listing requirements. We kind of already talked about that. So this is kind of what I wanted to make sure people knew about. So what to consider: fractional shares. So if you don't have a number that's a multiple of 10 for ULTY, or of 5 or 10, whichever, depending on which fund you're in that's getting reversed, then not financial advice, but here's what I would do. I would either sell the amount of shares until I made it a multiple of 5 or 10, or I would buy the amount of shares that it would take to make it a multiple of 5 or 10. That's just what I would do. That's not what I'm advising you to do, just for ease, just for smoothness. But if you don't have a number of shares that's an exact multiple in the ratio, you will end up with fractional shares. Your broker will likely redeem this for cash, and the redemption may be a taxable event. So while the split itself is not a taxable event for most shareholders, if you receive cash because your broker basically gave you cash in exchange for your fractional shares, then that's the case. Now, at the same time, are you really worried about the tax implications of somewhere between 4 or 9 shares to get you to the next 5 or 10? Probably not. We're talking, what, $20, $30, $50, $100 of a taxable event. So I doubt that that's going to be a huge implication for people. And then long-term outlook: the reverse split does not change the value of the ETF or the assets that it holds. So for long-term investors, the key is the fund's performance and fundamentals, not the share price. There was one more thing on a different page that I wanted to read to you. No change in total value. All right, so this was talking about margin calls. So here is the positive, and here's there are some people, if you don't buy on margin or use your margin in your account, then you're really not affected by this at all. Obviously, you're not going to like that you had 1,000 shares and now you have 100 shares, but it really doesn't change anything. But as far as options, it does. So what we've got, options contracts are adjusted to reflect the new share price and quantity. The original contract is going to be replaced. So this is if you're actually trading options on it. Things will get a little bit goofy until those end up. But just understand, I've seen it before. It's similar to when there's like a special distribution. All of a sudden the option gets, even though you had bought it or sold it for a certain strike, it'll either now say a different strike that is the exact multiple or ratio, or it changes you to suddenly having a smaller quantity of the options. It'll look funny in your account, but they understand what they're doing. They've been through this multiple times. That is, the brokers and the financial institutions. But this one's important, okay? Order cancellation. So if you have limit orders and good till canceled orders, they're usually going to get canceled during a reverse split and need to be replaced. So let's say you were wanting to sell your ULTY shares if they hit $5. That isn't going to automatically turn into a sell your shares if they hit $50 when they do a reverse split, or buy shares for this or that. So understand that if you have those type of orders in, you're going to need to redo them afterwards, because those will get automatically canceled. All right, we already talked about fractional shares. You will most likely get the cash equivalent. And then here's where we talk about margin. So as far as higher share prices, some brokerages have minimum price requirements to borrow on margin. A reverse split can bring a stock price above this threshold, allowing investors to use the stock as collateral for margin loans. That's what we're seeing a lot of. People, if your share price drops too low, as in like ULTY's case is going, your broker might require a higher margin maintenance, and then all of a sudden now you do not have enough margin, and then you are worried about margin calls where sometimes they'll warn you, and so you've got to either sell something or add more cash, or sometimes they will just execute it for you by selling shares of something just to generate the money. So if you do not want that happening to you, then this reverse split helps because it gets those share prices out of that low range where the brokers are getting nervous. All right, stocks in distress, reverse splits are often seen as a sign of struggling company. So that is true for struggling companies. And I'm not saying that these YieldMax funds are not struggling, but they're not in that sense, right? They are literally a collection of money and options. And so if there's $1.5 billion, it's not in danger of becoming zero just because the share price is getting low. If there was, a couple $100,000 in there or $1 million in there, then okay, maybe you're getting nervous. But that's not the case when there's billions of dollars. A share represents a portion of billions of dollars. It's not in danger of going under. But it also says there's a potential for volatility. That's another thing that happens a lot of times with stocks. So if a company, let's say, pick any company, Coca-Cola, for example, is struggling, having problems, and the share price keeps dropping, and then they do a reverse split, which you'll a lot of times see, and is as soon as the reverse split happens, it just keeps on dropping again, just as rapidly, sometimes even worse, because then all of a sudden the hedge funds jump on and everybody's shorting it. In these cases, I don't think you have that to worry about. I'll explain why. Like I just said, these are a collection of, this is basically just a collection of money divided by an amount of shares. So a share is worth $4.13. If this gets to the point where it's still worth $4.13, but it's trading for, say, $4, well, all your big funds are going to come in and buy $4.13 for $4 all day, every day. So you can't really short these in that perspective. Now, if you think the market's going to keep dropping, then these funds are going to keep dropping with it, then you would be right that it's going to continue dropping. But that's not because of pressure being put on them. That's just the result of the stock market. All right, so this is getting long. I'd like to end it there. I hope this helped. If you have more questions, please list them in the comments. If you like this, please give it a like. Please share it with others. So again, we are looking at close on November 28th and close on December 1st is when the action is going to happen. And if you don't have X and you're interested in this stuff, I suggest you get it. YieldMax will be speaking on Spaces with Wolf Financial right here tomorrow, and I guarantee the 12 o'clock call tomorrow is going to have lots of talk related to this. So thank you for watching. Have a good night. See you in the next video.